Yo, good morning everybody. It's Curtis back with another investment video. Today, I wanted to talk to you about how to make money crowdfunding. So, in this video, I'm going to talk about what crowdfunding is. Do people make money crowdfunding? How do you make a return? I'm going to talk about EIS, which is the Enterprise Investment Scheme. I'm going to talk about who you should invest in. I'm going to talk about how much you should invest. And then I'm going to talk about my own current crowdfunding investments. So there's a lot to cover off today. Hopefully you guys will find this video useful. If that sounds like something you're interested in, please hit that like button right now. Also, please subscribe to the channel if you're not yet subscribed to Infant Investors. This channel is about helping all new and non-investors make sense of the market. I do this in a number of ways, from my own portfolio update to random videos like today about topics that I think you guys will find very, very interesting, and try and make it as sort of clear and simple as possible. But yes, let's get into crowdfunding. So for those of you that don't know, I'm sure most of you would have heard the term crowdfunding, but you might not know specifically what it is. Now, just to be clear, I'm not going to be referring to any reward-based crowdfunding such as Kickstarter. So typically with platforms like Kickstarter, you will give a company a bit of money, you might get some rewards for investing in those companies, but you're not actually really looking for a return. That is a form of crowdfunding, but the type of crowdfunding I'm going to specifically refer to today is crowdfunding with a view to making a return, a financial return, in a number of ways at some stage in the future. So generally speaking, startups will raise capital from investors, and the investors are called the crowd. So effectively, everyday investors, people like you and me, now have the ability to invest in, a whole range of startups that you can kind of, see on your screen here. And, the purpose for an investor to invest in a startup is effectively, you're helping a new business achieve their goals. But hopefully at the end of it, you also make a return on your investment. Now, we talk a lot about IPOs on this channel. We've spoken a lot about how, when a startup or when a private company becomes public, they do this through an IPO, and that's typically our opportunity to invest in these companies. But usually at that stage, they're heavily overvalued. We're getting it at a very, very high share price. I've shown data to prove that most IPOs generally fall in performance for years after they've actually launched, and so we generally don't make that much money, and the money is generally made by the private investors that got into those companies at a very, very early stage, from a seed stage through to the rounds that those companies go through, but generally from a private equity stage. So crowdfunding is kind of your opportunity to be at that stage. And so hopefully if it does IPO in the future, then you'll make a better return than if you got it at IPO stage. Now the question is, do people make a lot of money crowdfunding? And yes, there are investors that have actually claimed to make a substantial amount crowdfunding. Crowdfunding as a concept is still pretty new in the grand scheme of things. So if you think the stock market's been around for hundreds of years, crowdfunding, or maybe just over 100 years, crowdfunding has been around probably for about three to 4 years. So relatively speaking, it's not actually been around for that long, but there have been some investors that have mentioned that they've made quite a bit of money. You can just do a quick YouTube search and find a few of them. What I will say though is that probably more have lost than they've made, particularly in these early stages, just because there's slightly different components that you guys have to sort of be aware of when you're crowdfunding and when you're considering investing in these startups. Startups do pose and do possess a lot of risk. They're obviously a lot more riskier than publicly traded companies. So there are different factors that you guys need to be made aware of, which obviously I will cover off in this video. But I think as it grows and as it gets more widely known and widely adopted, then I think that crowdfunding will be a genuine source of profit from an investor standpoint. And so, there is a lot of potential to make a decent amount of money in the next 2, 3, 4, 5 years and beyond, providing you obviously select the right companies to invest in. So the question then becomes, how do you make money crowdfunding? How do you actually make a return? And there's three ways, but I'm going to mention 4 ways, because one way is kind of 3.5. I'm kind of stretching it, but it's kind of 3.5. But I think the 4th way-ish is worth you being aware of. So the first way is transferring your investment to another investor via the secondary market. Now, this is actually a new way, and this way wasn't actually available for the early stages of crowdfunding. So, with platforms such as Crowdcube and Seeders, they have now introduced a secondary market, which allows you to basically sell your shares to another investor. And I assume that you'll be selling it at whatever the market value is for that current organization that you've invested in. And so therefore, if you invested, say, a year ago and you sold it 2 years down the line to another investor who wants to get in, there should be an increase in the value and the share price at that stage. So that's one opportunity. Again, none of this stuff I've done yet. So always do your own research, but that is one of the routes that's possible. The next route is if the investment, so let's take Money Dashboard as an example, if it has an exit strategy where they plan to be bought or acquired by a more established company. So if Money Dashboard, as an example, they start to perform really, really well, they become a threat to an existing business, they become a disruptor to an existing business, then what an existing business might do is actually say, you know what, we don't want to have to compete with Money Dashboard, so we're going to buy them. And typically they'll buy them at a sort of inflated valuation, so it could be 3, 4, 5 times their valuation, in order to incentivize Money Dashboard to stop operating. And then therefore anyone who's a shareholder in Money Dashboard at that stage will receive that percentage growth in their portfolio. So, generally speaking, when you're looking at stock market movements, you're looking at, 1 to 7, 8, 9% a year, if you're amazing at investing, really. Whereas you can, in a startup world, potentially, be talking about 4, 5, 600% of your investment, because that is the type of valuations that they will expect at the time that they're being acquired by an existing company. So when you're looking at a specific investment, try to always find out what their exit strategy is. An exit strategy is crucial to an investor, and then it gives you insight into when you can think about realistically making a return on your investment. The third route is an IPO. Now, I would say that this route is obviously a lot more infrequent, but obviously there is a possibility. So, if the company performs extremely well and then wants to float on the stock market, and I'll give you an example of a company that I believe will do that, then, that IPO will effectively be the way that you can start to liquidate, and obviously the share price increase at that stage will hopefully be phenomenal, and you guys will make revenue on that. In terms of the logistics of actually making that happen, there'll probably be a lot of work and involvement from investment banks in order to how to sort of calculate and value the shares and so forth. But effectively the principle is, if you own it, then you own it, and there will be a route to make money during an IPO. The 4th, or the 0.5 way that I'm going to refer to, is this 3 letters here that you call EIS. Now, this is not really a way to make money from your investment, but I will say it's a way to protect your investment slightly and make somewhat of a return should the investment fail. So EIS, and I'm actually going to go over to this tab here, EIS, and I'll put all of these links in the description. As you guys know, EIS is a government scheme to encourage investments into startups and early stage businesses. And effectively, if an organization is EIS eligible, so if we go back to our crowdfund, so Gosney would have to be EIS eligible, which you can see here. I don't know if there's so full green here. As you can see, it's not EIS eligible currently. Maybe they're applying for it, but at the moment it's not EIS eligible. But Packler Medical is EIS eligible. What that effectively means is that if you are a UK income taxpayer, then if the company goes bankrupt, you will be able to claim back up to 30% of your investment via your income tax relief, if that makes sense. So, let's say you invest £1,000, you'll be able to claim back £300, and that £300 would come via relief on your income tax that you would currently pay via your PAYE salary. So that is a way to kind of de-risk, I would say, your investments. But obviously they have to be EIS eligible. What you'll be looking for is something like this. So, they will apply for what's called an assurance, and effectively that assurance will tell the business and investors that it's EIS eligible, and investors will be able to claim some of their money back. So this is an example from Money Dashboard, which you definitely need to look at. And generally, those are the ways to make a return. Now, the question then becomes, who should you invest in? And I think at this early stage, this is a really important question, but it's a really open question. And my personal take on this, and again, this is just my personal take, this is not necessarily advice, is invest in companies that you're passionate about. That's probably my number one advice, because if you think that the potential of potentially not making a return is quite high, then I would want to know that I invested in a company that tried to do something remarkable in the world. Maybe they failed at doing so, but at least for me, it wasn't just solely a waste. I'm not solely investing just for profit, but then actually I didn't believe in what the company was doing anyway, because then that for me is a double hit. So I would say, it's like, let's say, I don't know, you do a course or something, and then you realize at the end of that course that you don't actually want a career in whatever it is you studied. The actual course wasn't a waste as much, because there was a reason to invest in. But if you was to be told to go learn something that you had no passion about, and then you still didn't get a career at the end of that, then obviously it's a sort of a double whammy. I don't know if that analogy made sense, but it made sense in my head, which sometimes is the only thing I care about. No, that's not true. Anyway, I think invest in companies that you're passionate about is really important. I think also, coupled with that, is invest in companies who are solving a problem that you want to be solved. So maybe you're not so passionate about it, or maybe you are, maybe it goes hand in hand, but if there's a problem that they're trying to solve, then I think invest in those type of companies. So as you can see, for example, I've put a star here on Sun Harvester, which is all about being green, and trying to help areas around the world that's been affected by disaster to have energy to their homes in a mobile format. And I really like the sound of that, and I really like the concept of that. You know me already, anything green get fund. I like funding green investments. I like funding investments that I think not only will provide a return, but will also be beneficial to the planet that we all inhabit. And I also think that there is a misconception that investing green means it's not going to be profitable, but there's a lot of stats and data to show that green and sustainable investments are actually of recent times a lot more profitable than ones that aren't so. So, me personally, and this is just me being open with my sort of belief system and worldview, I won't always invest in green investments, as you know. But, if I find a green investment that I like, then, if it's green, it's going to get fund. Anything green get fund, as I said, and I will try and support it as much as possible. So I think if it's solving a problem that you want to be solved, or it's a product that you would use yourself, that's something to be mindful of. The other thing I would say is invest in a company whose, business model you understand. So, here I'm using Lucky Trip as an example. I used to work in travel. I've worked in travel for a few years, and I came across Lucky Trip about 3 or 4 years ago. And at that time, it was just an affiliate service where, you'd press the Lucky Trip button, and then you'd be able to book a flight through Booking.com, or book a hotel through Booking.com and a flight through Skyscanner, and it would sort of package that for you. Now, they made money based off the affiliate links from Booking.com and Skyscanner. Now they've got, ways where they're actually processing the whole holiday booking themselves. And I understand how travel companies make money just because I've worked in travel before. So if you invest in a company where you understand their business model, then I think you're more likely in a position to be able to ascertain whether or not their projections are accurate, and whether or not you feel that they're going to make a return in the future, and ultimately you make a return in the future. So I think it's that sort of Warren Buffett sentiment, where invest in businesses you understand. He always uses the Coca-Cola example. He understands Coca-Cola or Bank of America or American Express or whoever it was he invested in, and he doesn't understand Amazon, so he couldn't invest in Amazon. Whereas, a lot of us who are growing up in a digital era, we understand digital companies a lot more than maybe traditional companies, or we might understand both equally. Whatever the weather, I would say understand the business model, because if you understand how they're going to make money, you will then understand how realistic it is and how well you will potentially make money off the back of it. Now, when we talk about the idea of revenue, and you'll have companies, and I'll use this example here where it talks about some of their revenues and their P&L, and some of the values that they make, etc. And you can get all of their investor decks and their documents, which will give sort of more information. Revenue is a trickier subject when it comes to crowdfunding, because some of them are seed investments. So by seed investments, just think about when you're planting, I don't know, your chrysanthemums in your garden. I don't know if any of you guys do that, but maybe you do. You will plant the seed, and obviously you need to start watering it. You're not even going to see what is happening under the ground at the moment. You won't see that roots are starting to come out of the seed, and it's starting to get entrenched into the soil, and it's starting to germinate, and all of those things. I'm surprised I remember this much from my science GCSEs, but whatever. But you won't see that stuff happening, and it goes the same for revenues. You won't really see the return or the revenues in the early stages. You won't see them making money, and so it's very hard to sometimes just go on revenues solely. But if a company is making revenues, then obviously it is definitely a good metric to be looking at. Obviously, you need to consider their forecast and what they're looking to do in the long term, and what they're trying to do in the next year, 2 years, 3 years, 4 years, 5 years, etc. And try and work out how reasonable. Now, obviously, there are models and financial models to do that. About discounted cash flow and relativeness to your valuation and so forth. In order to keep this simple, I'm gonna sort of scoot past all of that. But what I will say is, when you find a company that you believe in, and it talks about its revenues and it shows you its balance sheets and so forth, then try and seek advice where possible, and try and just Google, how to work out whether or not it's accurate and it's valuable. But even if you're unable to do that, there is a community forum with most of these investments, and if you actually view some of the topics, generally people ask about barriers to entry and cash positive points, or they'll ask about revenues and so forth, and sales figures, and all of that information for you, due diligence questions. And so just read those, and actually a lot of the time you will get your answer here. So you don't have to be a pro at it. And so the simplest way is just try and absorb all of this information as well. But I wouldn't go reading all of this to make your investment. I'm quite methodical in the way I do things. I would first of all look at what I want to invest in, then I'll try and look at what problem they're solving, and business models that I understand, and then obviously I'll look into sort of their revenues, projections, and so forth. The other thing to sort of be very, very mindful of is their management team. their management team is crucial. You know, who are their managers? Who are the people that are at the helm of this business that are responsible for driving this business forward, and making sure that, you know, the business is successful, it achieves its ambitions, and hopefully you achieve your investment. If you've got a management team that don't have that much experience in their field, you know, it's a red flag. If you've got a management team that work part-time on this project, it's a red flag. To me, it's a red flag. I want someone that breathes this startup day in, day out. A whole team that breathes the startup day in, day out. If you've got a management team that talks about, you know, they need to hire more people before they can be able to, you know, start to achieve their goals, it's a little bit of a red flag. They should have them in place before they elicit funds from, you know, the crowd, from me and you. Those are my red flags. They might not be your red flags, but those are red flags that I personally would consider. So just make sure you've got a management team that you believe in. You know, research them, you know, whether it's LinkedIn, whether it's on YouTube. A lot of them have got videos, they're promoting what they're trying to do, and just see if you can buy into the individuals. I always think about, you know, Dragon's Den a lot when I think about crowdfunding. And, you know, when you have an investor that goes in, an entrepreneur that goes into the Dragon, a lot of the times you'll have a Dragon that will say, you know, I don't believe in your company, but I believe in you. So stay in contact. And, you know, if you've got a new company, I believe you can make that go forward. Sometimes you have it the opposite, where people don't believe in the investor, in the entrepreneur, but they do believe in the business, and they just don't think that person is the right person to drive that business forward. So, you know, you've got to be your own dragon, I would say. Be a dragon, and, you know, work out, you know, be scrutinized, and I would get into the discussion forum. You know, I've requested documents, and I've had a lot of these CEOs actually email me privately, and so I've, you know, been able to ask them questions on email, and some of them are really responsive. So that is another way that you can kind of gauge, you know, who they are and whether or not they're going to be good at delivering a return. And then the last thing I would say is a market opportunity. And what I mean by that is, you know, is there really potential in this business? Is what I mean by that. Is there a market for it? You know, where are the markets? Where are they going to be operating? Is it a UK business? Is it a global business? Is it a European business? Are they trying to crack the US first? What's their experience within that market? What's the size of that market, the size of the opportunity? So how big is the market, and how much of the market are they trying to take in their first sort of 1 to 5 years? Where is the market going? So where do they see the market evolving? So markets don't generally stay stagnant. They evolve and they grow, and they sort of augment and they change as you go forward. And it's really, really crucial for you guys to understand that and sort of be aware of that. So definitely look at what the market opportunity is, and actually understand whether or not it's an investable opportunity. Now, let's say you've done all of that. You know, you know, they're EIS eligible, you know who you should invest in, you're happy with their revenue, their projections, you're happy with their management team expertise, the market, etc., etc. The question then becomes, how much should you invest? Now, actually, when you go to Cedars, they actually talk about, and I'm not going to try and find the part of the website, but they actually mention that you should only invest 5% of your annual income if it's less than £100,000 a year, and if it's more than £100,000 a year, invest 10%. There's an article from Forbes which said that it should only make 5% of your overall portfolio. So if you consider your portfolio is cash, stocks, bonds, everything else that you might invest in, then a maximum of 5% should be in the sort of risky startups. That's sort of the guidance currently in the market. But I would just say, you know, you have to work out what's best for you. Exercise caution. I know some people that only have money in crowdfunding opportunities. They don't really invest in the stock market, but they've invested in crowdfunding opportunities that they think is gonna do well, and that's sort of been their priority. So from that standpoint, technically 100% of their portfolio is in crowdfunding. However, obviously, if they've got cash or a good income, then you know, it's not 100% of their total net worth or wealth from that standpoint. So you guys have to work out from your own standpoint what's sort of viable. But I would say my only advice to you would be to be cautious, invest what you're willing to lose. You're more likely to lose than to gain in crowdfunding than you would in the stock market. At least in the stock market, you probably would get some return. You'd only lose if, say, the company went bankrupt, which is a lot less likely in the stock market. So you've got to consider those factors. So it is risky, it is speculative. So from that standpoint, try and exercise a little bit of caution. Now, how much does it cost? It's not free. It's not free. Nothing in the world is free. Actually, that's a lie. There are some things that are free. Oxygen's free. But other than that, listen, hopefully they don't start charging for oxygen. Anyway, I'm digressing. Listen, it isn't free. There are some costs associated with crowdfunding. So, and it depends on the platform that you use. So the most widely sort of recognized platforms are Crowdcube and Seedrs in the UK. But there are loads of platforms. There's like AngelList. There's loads of there's one I was looking at the other day called Republic, I think. There are loads of crowdfunding platforms. So don't think you're limited to these two. Go anywhere where you think the right business is obviously trying to raise funds from. With Crowdcube specifically, they charge 1.5% of the value of the investment, and it's capped at a maximum of £250. So, if you invest, £1,000 into an organisation, then you'll be charged £10.50 effectively, and that is the fee for investing via Crowdcube. I don't know if my maths was correct, but forgive me if it's not. But if it's Seedrs have a slightly different model where they charge you 7.5% on any profit that's made. So you don't pay anything to invest directly. However, if you do make a profit, 7.5% will go to Seedrs. And so, you have to work out, if it's viable for you, if it's something you're interested in, etc. But those are the general fees, and there will be different fees associated with different platforms. So whether it's Seedrs or Crowdcube, or whether it's another platform that's emerging or coming up, and that's got businesses you want to invest in, just make sure you're aware of whatever the fees are in order to make those investments. So that's all the general information. What is crowdfunding? Do people make money from crowdfunding? How do you make a return? EIS, who should you invest in? Revenue, what you should look out for, and effectively how much you should invest, and obviously the fees associated with investing. So if we go to my current crowdfunding portfolio at the moment, I only invested in Freetrade. As you can see, I've invested in two companies actually. I've invested in Freetrade, and I've also invested in Monzo. Those are the two organizations that I've currently invested in from a crowdfunding standpoint. The reason why I invested in Monzo, and I don't have it viewable here, but I'm just gonna, for a visual effects, a visual aid, I'm just going to put Monzo on the screen just in case anyone doesn't know what Monzo is. So Monzo is obviously a digital bank that started and launched in the UK. At the moment, they've now hit the 2 million customer milestone mark. They acquire 35,000 new customers on a weekly basis. So, a lot of growth from a consumer standpoint. They've recently announced within the last day that they're planning to launch in the US, which, will be a competitor for, Apple Card, which you guys know that Apple is launching within the US. And, I think the US is a huge market. It's absolutely a huge market. I don't know their millennial or their sort of young adult market figures to hand, but I would imagine it's sizable. So there's definitely a lot of opportunity for Monzo to sort of penetrate a percentage of that market and obviously gain a bit of revenue. They're eyeing up a £100 million investment from an American investor to help with that launch, and if they do, that would now raise their valuation from 1 billion to 2 billion. So at the time I invested, their valuation was 1 billion. Now I think it's actually maybe just a bit less than 1 billion, but let's say 1 billion for argument's sake. If they they successfully do this, they'll now be looking at about a 2 billion valuation. So, that's a good level of growth. Obviously, it's an amazing level of growth. They're what's called a unicorn. So a unicorn is a startup that's valued at over a billion. That's what the term is. And so, ideally you want to be trying to find unicorns, but that's not always going to be possible. They're unicorns, right? They're rare. That's the essence of unicorns, I guess. So, unicorns don't really exist. Anyway, let me not get into that. So that's a unicorn, and so I think they've got obviously a great potential for the future. Obviously, the only other company that I've invested from a crowdfunding standpoint, as you can see, is Freetrade. I invested £500, as I mentioned to you guys previously, and so like Freetrade, I'm an avid user of Freetrade, as you guys know. I believe that their positioning within the UK, they're a product and they're a service that the UK needs. I think it's helped a lot of people to begin their investment journey, and I think it will help a lot more people to begin their investment journey, just because the fees associated with other platforms are just sort of extortionate, and so it does create a barrier to start investing when you're sort of more worried about the fees that you're going to be charged. They're planning to expand into Europe. They've got a strong following, and all of the other stuff I've talked about. I've talked about free trade so much that you guys will see that in the previous videos. However, I've now shortlisted a few more organizations that I feel to invest in. As you can see, for Money Dashboard, today's the last day that I can invest in it if I want to for this crowdfunding round. They might do a round in the future, they might not, who knows. But I've got 6 days left for Lucky Trip, 5 days left for Harvester, 12 days for PaveGen, 8 days for Unbound, 15 days for I Love Snacks, and 11 days for ARC Vehicle. These are the current ones I've shortlisted from Crowdcube. I haven't yet shortlisted any from Seeders as of yet. The only one on Seeders that there was Evervest, which I've done a video on, but I do need to do my due diligence on a lot more of these companies and decide if any would I invest in. If you want to ask me how much I'm looking at, my investments will range anything from £50 up until maybe 500 if I really believe in them. Like, I'm not going gun ho with it. So it might seem like it's a small amount of money, but it's just because of the element of risk. I'd rather put money in that I know that if I lose it, I'm not going to be up all night sort of worrying about it. So I don't mind putting £50 into a company that I believe in. If I make some money in the future, great. And hopefully that'll be the case, and hopefully I'll regret not putting more in. I'd rather be in a position where I regret not putting more in than I regret sort of overexposing myself and the company just fails, etc. I did put more in Monzo, but Monzo's unique, man. Monzo is an absolute unique case, and so Monzo, I put £1,000 into Monzo at the time. And I actually wish I'd put more. I think the maximum was 2,000, and I wish I put more in. But if they do another round, then I will put more in, just because I genuinely believe in Monzo. I do believe in Freetrade, but I do think they've got a little bit more in the way of headwind and competition with, say, Robinhood potentially coming into the UK or Europe, and some of the other investment platforms that are sort of sprouting up, such as things like Evervest, who claim they'll have 8,000 stocks the moment they launch in the second half of this year. So, I think those are the types of factors you need to look at, and you need to evaluate those factors along with your ideals and your risk tolerance, and make your own decision. There is no one size fits all. So if anyone is looking for a formula that makes the best crowd-funded investment, I don't know what that formula is. Share it in the comments if you know. I don't think it's out there. I think it's too new to have a specific formula. Sometimes, you will get these analysts with, say, stocks and bonds tell you that this is the formula you need to follow to be successful. And even that's questionable, but I guess some of them are tried and tested. With this, I think you have to, be cautious, invest in what you believe in, invest what you're happy to lose, make sure they're EIS eligible so you can get some of that money back via a tax relief, and, hope for the best, and, take it from there. What happens once you've invested? Once you've invested, you'll get obviously your share certificate, so that'll be an official record of your investment, and hopefully if the company's good, you'll be getting regular communication from the company, telling you, what they're doing, what their plans are, how well they're performing, how they're growing. Remember, when you're an investor, do not think that you owe the company anything. You own the company, you own an element of the company. So, if you want documents, email them and say, I want to know this, I want to know that. It'll be down to the company how open and transparent they are with sharing things with you. But effectively, you have a right to a lot of that information because you are an investor into that company. So, I know some of you guys are quite young and you think that, invest in the company and, it's you're beholden to them. You're not. You're really, really not beholden to them. They're beholden to you. The reason why they're asking for your money is they need you in order to grow. So remember that. Remember the power is in your hands. And if you want to know something, ask them. And hopefully they'll be very, very responsive or hopefully at least someone else will give you that information. But ultimately they want to be successful. And if they're crowdfunding, they are not going to be successful if they are not having great dialogue and communication with their investors, which is you guys. So ask any question that you want to know. I'll definitely will. I'll spam them. I don't care. They'll have to put me into their junk folder because I'll spam if I want to know something. But it's all to make that me invest more into that business, really. So the essence and the reason why I'll be doing that is for a positive reason. But yeah, that's all I believe you guys need to know at this stage about crowdfunding to sort of get started. I hope you found this video useful. I'll be really, really, really interested to know what companies you've crowdfunded and what companies you've invested in. So please get in the comments with a list of companies you've crowdfunded. I don't need to know the amount you invested, but share what companies you've crowdfunded and let everyone else know. And so it'll be good for people to kind of research. I know obviously some of those companies might have closed their crowdfunding round. So let's say, for example, I do invest in Money Dashboard, then it might be that you guys won't be able to invest in them. If you watch this video tomorrow, for example, then you won't be able to invest in them. But if you're watching today, then you might be able to invest in them. Again, none of this is advice. I'm not telling you to invest in any of these companies. I might not invest in any of these companies. Just because they're shortlisted, it doesn't mean that I'm going to invest in them. It just means I'm monitoring them. Similar to the way I do stocks on my spreadsheet, I'll put them into a pending state. I'll evaluate them a little bit more further, add a little bit more scrutiny, and therefore then make my decision of whether or not I want to add it to my portfolio. And that's the process I like to go through just because of who I am. But you guys don't have to effectively do that. But yeah, just sort of get in the comments with the companies that you are invested in, and it'll be very, very interesting to know. If there's anything that I haven't covered off, then please get in the comments, and obviously I will try to make sure I cover that off in the future if I do any type of follow-up information on, let's say, who I've decided to invest in, as an example. Hope you found this video useful. Again, this is not meant to be any advice, and just remember your capital is obviously at risk, and so you should always exercise a lot of caution when you're making these kind of speculative investments. But if it's something you're interested in, it can be quite exciting, and it can be quite rewarding knowing that you've helped a company achieve its objectives and you've made a bit of money doing it at the same time. So all the best with your investments, all the best with what you decide to choose. I know this is obviously a long video, but I didn't want to cut any corners. I want to try and be as thorough as I possibly can, but keeping the information as simple as I possibly can. So please please comment, please subscribe. Have a great weekend, have a good Friday, and have an amazing weekend, whatever you guys decide to do. And I will catch you next time with a new investment video. Take care, guys. Happy investing.